And in our top business story, Flagship sectors and Expo-related projects have boosted confidence among Dubai businesses in the third quarter, with manufacturers most confident and optimistic on the final quarter of 2016. That's according to the latest survey. Domestic investments, boosted by preparations for the Expo 2020, along with the tourism and retail sectors, continue to prop up business sentiments in Dubai, as companies across the Emirate maintained a buoyant growth forecast for Q4. That's according to the quarterly business survey of the Department of Economic Development. The Composite Business Confidence Index of firms in Dubai rose 4.9 points to reach 122.4 points in Q3, compared to 117.5 points in the previous quarter. The survey also showed that the proportion of businesses foreseeing improvement in Q4 has risen to 50% from 44% for Q3, while those expecting deterioration has declined from 12% to 10%. With expectations of new orders from customers and the seasonal improvement in demand observed at the end of this year as the main drivers of a positive outlook. The majority, at 79% of firms, plan to retain their staff count for Q4 this year, while 15% plans to hire, while 66% plan to invest in technology in Q3, against 65% in Q2 and 61% in Q3 2015. Dubai communities witnessed some of their biggest rental declines in the third quarter of the year. That's according to leading property specialists at Chesterton's. After remaining steady in the second quarter this year, rentals in Dubai sharply declined in the third quarter, with the lease market remaining favourable, with tenants having more negotiating power in the current market. It was revealed that while rents in Dubai in general fell between 1% and 2% in both the apartment and villa segment, two-bedroom units in downtown Dubai, Jumeirah Lakes Towers and The Greens witnessed their biggest declines, and average rents for three-bedroom units in Dubai International Financial Centre, downtown Dubai and Marina remained stable. In the villa segment, Arabian Ranches registered the maximum decline, with an average four-bedroom villa available to rent for 245,000 dirhams a year, while rents for villas on the Palm, Jumeirah Village Triangle and the Springs remained steady. Property specialists were quoted saying that demand for property remains relatively stable, but job losses and lower spending capacity among tenants have placed pressure on rates in the second and third quarter. According to officials, Dubai Marina is still the most popular, attractive location for investors, with sales worth 654 million dirhams, with consistently high levels of yield, while the highest transaction values remained in the prime Emirates Living, Palm Jumeirah and downtown Dubai areas. The Abu Dhabi national energy company TAQA has posted wider third quarter losses this year, caused by a drop in oil prices, according to the latest report. TAQA has reported a net loss attributable to equity holders of 524 million dirhams in the 3 months leading up to the 30th of September this year, as compared to a net loss of 416 million dirhams in the same period last year. The losses come despite a heavy cost-cutting program initiated by the company, which had more than 6.5 billion dirhams of cash cost and capital expenditure savings under a transformation program that was launched last year. The bourse filing reported that revenues from oil and gas amounted to 1.18 billion dirhams in the 3 months that ended on the 30th of September, compared with about 1.49 billion dirhams in the same period last year. While total revenue fell to 4.2 billion dirhams from 4.83 billion in the corresponding period of last year, oil and gas production fell 1.9% year-on-year to 142,200 barrels of oil equivalent per day during the first 9 months of this year. And Waha Capital reported a 30.6% drop in third quarter profits due to lower income from assets in its principal investments and private equity divisions. The Abu Dhabi-listed investment firm stated that net profit for the 3 months to the end of September fell to 81.8 million dirhams, compared with 117.9 million for the same period last year. For the first 9 months of the year, profits from the firm's principal investments division, which include its investments in aircraft leasing firm AerCap, Dunia Finance and Sanford Marine Services, fell 11.6% to 406.1 million dirhams. Waha Capital stated that profits at AerCap fell due to losses from its aero turbines business line. Waha Capital's chairman, Jassim Al-Nuwais, stated that they are confident that the company has the expertise, financial strength and the strategy to continue delivering a very solid return on equity and to take advantage of attractive investment opportunities.